Hello, Abe Safa here with Century 21 Harrelson Group in Myrtle Beach. I want to do this quick video because this is one of the most common made mistakes that I see in our market here. I do a lot of business in the area. I've been here 34 years in the Myrtle Beach area, and I've seen it change tremendously. Um, I know we sell a lot of condos. I sell a lot of condos myself. I do well over 150 transactions per year. So I do a lot of business in the area. So I keep a very close eye on the condo market as far as valuations, as far as return on investment and things like that. And I see the mistakes that people make all the time. And one of the biggest mistakes that I see people do is buy one of these properties and not look at the numbers. Okay. So, I get this question all the time on whether I think they're a good investment, whether someone should buy an oceanfront condo or not. It really depends on what your goal is and what your intention is with the property. But regardless of what you're intending on doing with the property, you should at the very least go through the simple step here of crunching the numbers and then seeing at least what you're getting into as far as a return, whether it's a negative cash flow or positive cash flow, what your return is going to be. So there's only a couple of numbers that you really need to pay attention to. And I'll go over them here real quickly. There's some of the most important things, obviously, is what the rental income is going to be on a unit. And then what the management split is. So I did a couple. I went on the MLS and I pulled out two properties. Both are on the market right now. Both are under contract. Okay. One of them is at a building. I'm not going to mention the buildings because it's really irrelevant because you need to look at the numbers regardless. This particular unit is on the market for $134,900. It's under contract with a buyer. Now, this particular building does really well as far as rental numbers. Now, the HOA dues are really high, right? But their rental income is pretty good. And also, and this is going to go for both parties over here, the rental income for 2021 was inflated because in 2020, we all got crushed with COVID. A lot of these rental units didn't perform very well. There was a lot of pent-up demand. And then all of a sudden in 2021, everybody wanted to take a vacation. We had the busiest summer I've ever seen here in Myrtle Beach in my 34 years of living here. So the numbers are a little bit inflated. This particular unit did $43,000 in rental income. This is a one-bedroom unit that's selling for $134,900. So $43,000 is a high number. Now, a normal number for this unit might be in the 30s, might be 32, 33, sometimes 28, somewhere in that ballpark. So I'm going to plug in these numbers real quick. So $43,000 is what they did in rent. This particular unit, their property management split is 41%. Okay, what that means is for every dollar that's rented, the property management company keeps 41%, 59% goes back to the owner. So that's a big number, right? But that's very common for oceanfront. It could be anywhere from 30% all the way up to as high as 50%. So depending on the unit, 40 to 45 is where most of them are. So at a 41% split, you see the property management company gets 17,630. That leaves the owner with 25,370. That's what the net rental number is. But that's not what you're going to make because there's other costs, right? You got to take into account your HOA dues. This particular building, as I said, was high on the HOA dues. It's $919 a month. That's very high for a one-bedroom unit. So now $11,000 goes out of that to HOA dues. You see the number down here starting to dwindle down. Now it's down to $14,342 out of $43,000. Next thing you want to take out was property taxes off for the building, for the unit. This particular unit, property taxes were $1,422. Okay. HOA 6 insurance, a couple of $100. Let's just put $250. Other costs. Okay. I'm not going to factor in other costs, but based on your tolerance for risk, some people like to factor in 5%. Some people like to factor 10%. This is going to cover, look, the couch breaks, the dining room table breaks, your TV breaks, things like that, and you have to replace them. So as a rental property, you can expect some things to happen, anywhere from 5 to 10%. I'll leave that up to you to put in what you want. But look at the return on this. So your net income so far is $12,670 on a $43,000 rental gross rental number. Now, what we haven't factored in yet is whether there's a mortgage or not. And this is where it gets a little bit tricky. And this is the part where you really have to pay attention to. So if you paid cash for this unit, let's just say you bought it at $135,000 and you can make $12,670, take out another 10% to factor other costs and stuff. You're still making $8,000, $9,000, $10,000 off of this unit. That's a pretty nice return for a $135,000 investment. Now you throw in a mortgage, okay, based on your credit score and things like that. Let's just estimate $700 a month mortgage, $8,400 a year. Now you see that number drop down to $4,270. Again, that's still a very strong number. on a $135,000 property, if you put 25% down, you can see how it actually made money in this particular case. Now, if all of a sudden, look what happens if this thing drops to, let's just say $30,000. Now you see, it becomes a negative cash flow. Okay? And again, some people, they're okay with a $3,000 negative cash flow. If you're going to come down and use it, 6, 7 times a year, your brother, sister, family members are going to use it a good bit. It's no big deal. It makes sense for you possibly to have a negative cash flow because the mortgage is being paid down. Over time, you're going to own it free and clear. That's the first unit. Second unit, and again, both of these are 1 bedroom. So now keep in mind, numbers can vary tremendously. These 2 units are pretty comparable in rental income. But some of these units, some 1 bedrooms could be generating, $18,000 or $15,000 a year, $21,000. It all depends on the unit. So you want to go through the process with whatever it is that you're buying out there. Okay, let's option number 2. This particular unit is selling for $194,500. This one is also under contract, different building, of course. These guys generated $39,000 in gross rent this year. Their split is $40,000. Okay. Now their HOA dues is significantly lower. This one's only $561 in HOA dues. Okay. Their property taxes are higher though, as you can imagine. It's a higher price unit, so their property taxes are $2133. Okay. Now you see, if there was no mortgage, if you pad this free and clear, you're making $14,000 based on 2021 rental numbers. If you adjusted this down to like a normal year, let's just say $29,000, you're still making $8,000 if it's paid for free and clear. So if you're buying cash, hey, that's not a bad return. It's what, 6%, 7%, 6-7% return on your money, which is pretty good. And at the same time, you got a free place to stay. Now, if you've got a mortgage on this, let's just say the mortgage is let's just say $800 a month, right? Now you see how this turns into a negative cash flow, okay, based on a normal rental year of $29,000. So these are the numbers that I want you to crunch. It's just a handful of numbers, 4 or 5 numbers that you need. The rental income, what the management split is, what the HOA dues are, what the property taxes are, whether there is additional insurance that you have to pay for or not, HO6 typically, which is a renter's interior insurance. The outside of the building is almost always covered in just about every single scenario. But the inside sometimes is covered, sometimes it's not covered. And then, of course, if you've got the mortgage, know in advance how much your mortgage payment is going to be, and then run this simple formula and see what you come up with. Look, at the end of the day, I can't tell you in this video whether you should buy an oceanfront condo or not. I can tell you that we have some of the most affordable oceanfront properties anywhere in the country right now. Myrtle Beach is ridiculously low relative to what condos cost elsewhere around the country for oceanfront. So there is some opportunities there, but it's got to make sense for you. If you want to talk about your scenario or whether it's a good buy for you or not, I'd be glad to talk with you. Whether you buy or not, it's okay. I want to make sure that you make the right decision. Give me a call anytime. I'm going to put my number up here real quick. Anything that you need, this is my cell phone number, my email address. Shoot me a message, give me a call, text me, whatever it is. I'll be more than glad to help you with whatever it is that you need help with. Thanks for your time.